What's up traders, Sasha here, Second Skies Trading. I hope you had a fantastic trading week, and we are back again here with another top trade review that we do once a week, where we review trades taken by our students inside our advanced courses. And this week we will be reviewing a trade by Sharpa, who is a long-term member who has been with us for multiple years and who I had the privilege to meet in one of our seminars that we had in London back in 2015. And he's a great guy, and it was a lot of fun spending time with him and all the other students at that seminar. And the trade we will be reviewing here is a short trade at the key resistance area after a short-term trend reversal. So a lot of interesting things going on here in this trade that I want to share with you here today. And in this trade we're going to look at the price action context leading up to the trade, the entry strategy they use to get into this trade here, so you can see how we teach our members to make money trading. We will also have a look at the exact entry, stop loss and take profit details, and towards the middle end here we will also have a look at potential trade improvements and what I think can be learned from this trade. But before we do, if you do like our content, please make sure to hit the like button and to subscribe to our channel to support us and to help us grow, so we can keep up producing content like this for you every week. Now, looking at this trade details here, you can see is the pound dollar that he traded, and he went short. His entry was at 133.92. His stop loss was 23 pips, which means his stop was at 134.15, and his target was 143 pips in size, which means his target was at 132.49. And he made a total return of 6.3R on this trade, meaning that he made 6.3 times his risk. So every $1,000 risked on this trade here would have generated $6,300 in profit. So really impressive return on this trade here. And there's a remark here that he writes in his post, which is that the entry was a tad early in my opinion, as it preceded impulsive corrective behavior that subsequently played out on the 30-minute time frame. And we will have a look at that and see what he means by that towards the middle end of this video here. And looking at this broker chart here, you can clearly see where he got in, his entry here. His stop loss is the little red line here, and you can see also where he took profit here. Now that we have covered the trade details, let's head over to TradingView, our favorite charting platform, and check out the price action context leading up to his trade here. And here we are on TradingView, which in our opinion is one of the best charting platforms out there. If you haven't tested TradingView yet and you would like to check it out, we do have a link in the top right corner that takes you to a tutorial, and in the description below we do have a link directly to TradingView, so you can check it out immediately if you would like to do that. Now in front of you here you can see that I have 4 time frames on my chart. In the top left I do have the weekly chart, top right the daily chart, bottom left 4-hour chart, and in the bottom right, I do have the 1-hour chart. You can also see here that I have Sharpa's trade here marked on my chart, where you clearly can see the entry, the exit, and also the stop loss of this trade. Now you can see that Sharpa went short here immediately after this strong bull run here. So to understand why he chose to go short here, we will in particular have a look at the weekly chart and on the 1-hour chart. So first out, the weekly chart, we can see that price has been in this bearish trend, but then found strong support here at around 120, that if we zoom out, you can see that is a multi-year support, which explains the strong bounce here in August 2019, and then also this very sharp 2-bar reversal here in March this year. And then after this reversal, price traded up to this area up here, which you can see is a long-term key resistance that has multiple touches dating back all the way to September 2018. So that's also a long-term multi-year resistance that price has hit, and you can see it was hit here on the 31st of August. So this is the first step of his trade here. He saw price trading into this long-term resistance and thought, hey, I want to see if I can go short here. And instead of shorting the zone and the resistance zone itself, he went down to a lower time frame to gather more information about the price action. So this is when he went down to the 1-hour chart, and that's where he saw this bullish trend here and this strong sharp reversal on the 1st of September, where price cleared this previous area of support, closed below, and also held below. And as you can see, this area of previous support, now that it got broken, started acting as resistance, which we call an RRL, which is a role reversal level. So meaning that the level flips its role from support to resistance in this example. So once price had broken below this support, this was when Sharpa said, hey, there's a potential short-term trend reversal. The short-term trend is turning from bullish to bearish. We have cleared a support in this uptrend. This is also in confluence with price hitting this higher time frame long-term key resistance. And there's actually one other thing on the weekly chart that we can see. If we remove the price action prior to sharpest trade here, you can also see that price is extended from its average here, from its moving average. This is the 20 daily exponential moving average, so the average price of the last 20 trading days. And you can see that price is extended here, suggesting a potential exhaustion, which means that one side of the market likely is exhausted at this point. In this example, the bulls. So the buyers are kind of exhausted at this point, and they are running into this long-term key resistance here. And when you couple that with this short-term trend reversal, you end up with a high probability trading setup here. And that's what Sharpa traded here. It looks like Sharpa entered at market once price closed below this support and had broken it. And in order to understand why Sharpa placed his stop where he did, we can go down to a lower time frame, the 30-minute, and we can zoom in further on this setup here. And to the left, you can see the clear area of support here, and you can also see where the resistance is. And I think that Sharpa kind of saw this little spike above here as a false break, so he went for a little bit lower with the entire support and resistance zone, and that is where he put his stop loss above. So all in all, in my opinion, a solid trade execution here. And in terms of target, we can go back here to the 4-hour chart, and it should become immediately clear why he chose this target area that he did. As you can see, we have this clear area around 132.50 here that previously acted as resistance, now potentially acts as support. And you can see that that is where Sharpa took profit, and price bounced exactly around this area. Thereafter, it traded through, but at the time, this area clearly provided support for roughly a day. So all in all, a solid trade here by Sharpa, in my opinion. I like how he kind of attacked this long-term key resistance using a lower time frame reversal in combination with price being extended and exhausted on the weekly time frame here, showing by the extension from the daily 20 moving average. So all in all, a really solid trade here in my opinion. Now, in terms of improvements, if we look at the lower time frame price action and we do remove this weekly zone here, so this is the area here that Sharpa was attacking. Basically these lows here that acted as support previously, then acting as resistance once broken. He entered here and he had his stop loss right above these highs, these wicks over here, and thinking that this was a potential false break here in this area. Personally, I would have preferred to have the stop above here because this is a decent double protection for this trade. It rarely happens that price reverses after such a strong bull run here and immediately just takes off. Normally volatility in reversals is quite high, so you want that little extra kind of protection for your trade, so give your trade a little bit more room to survive potential volatility spikes here in these areas, in these reversals. So what I would suggest and what I would have done here in this case is move my entry a little bit higher. You can clearly see this area here over here acting as resistance, then acting as support, now acting as resistance again. So maybe this area here around 133.95, maybe 1-2 pips lower to account for the spread, but other than that, move it a little bit higher. And along with that, I wouldn't make a lot of adjustments to the stop loss. I think it's a really tight and good stop loss. What I would do is kind of just move the order a little bit higher here and get in on the pullback towards the 20 EMA and this area here. Because as said, it's very rare to see just price reverse and just take off without any pullback or any kind of corrective structure or pause. You'll often see that after initial reversals like this, where support or resistance is taken out against the trend, you'll often see that price returns to this area to retest it, and also kind of to retest the dynamic support and resistance, which in this case is the 20 EMA. You can see this happen clearly here. So just move it a little bit higher up, and that also puts the stop kind of above these highs over here. So all in all, that would be the improvement I would make on this trade. It wouldn't likely change anything in terms of return, but it would give the trade a little bit higher probability of surviving potential volatility that's still in here in these type of reversal structures. But other than that, I think it's a really well played trade here by Sharpa. He attracted this long-term key resistance, price was exhausted, And on top of that, he went down to a low time frame to kind of optimize his entry and his stop loss instead of attacking a wide weekly resistance zone, which would have meant that he needed a really big stop loss unless he went for a super deep entry. Instead of that, he went down to a low time frame, looked for more clues and more price action and more information, and utilized that to get a really sharp entry and a really tight stop loss, so he could make a 6.3R on this trade here within just 2-3 days. So that's really well played here by Sharpa, in my opinion. So really good trade here, in my opinion, across the board. And this sums up this week's top trade review. We hope you found it helpful and interesting and potentially also learned something new from it. If you would like to get access to more free material like trading articles, free trading tools, a free forex course, make sure to check out our website at secondskiesforex.com, where you can find all of that along with information about our advanced courses, in which we, for example, teach things like exhaustions and how to trade them the way Sharpa did. Other than that, if you liked the video, please make sure to hit the like button to support us so we can grow and keep on doing these free videos for you. Also make sure to subscribe to our channel so that you get notified every time we release new content. If you have any comments and questions, post them below the video. Let us know what you think of Sharpa's trade or what your current bias and view is on the pound dollar. We look forward to your comments and questions. And with that being said, have a fantastic weekend. Good luck trading next week. Stay green, stay positive, and see you next week for another top trade review.